Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, after the Dow's best 5-day percentage and point gain in quite a while, stocks entered the month of December on a little bit of a down note, unfortunately, amid renewed economic concerns and anxiety over whether the automakers will get a bailout. Our panelists are anxious to talk about it all, and they are, this week, Zacks.com senior market analyst Charles Rotblatt, value stock analyst Tracy Reinick, and, of course, Zacks' top stock screener himself, Kevin Matris. We couldn't have a roundtable without a top stock screener, let me tell you. So all of this, folks, makes for a very challenging week once again, huh?
Yeah. It's true. You said that the last 5 days was the largest 5-day rally we had ever seen. And, very, very impressive, but it's really hard to infer too much from last week's rally because it was made on such light volume. A lot of the main market participants were gone for the holidays. I think this week's price action and next week's price action are going to be far more telling for what we can expect to see for the rest of the year. The last week we did see a lot of good price action, but again today everybody finally came back from holiday and we saw a big 400-point drop. So far, it's everybody coming back. It's not really telling a good picture for the future so far.
Well, and some strategists and analysts even had said that if the market were to keep that momentum in today's session, that would have been a signal that it was beginning to look forward.
Right.
Would you agree with that?
Yeah, to some extent. I also think, going along with what Kevin said about the light volume, it was actually also the end of the month, and for a lot of mutual funds, the end of their year.
Window dressing.
So, stranger things were happening in trading for that reason too. I mean, the rally was impressive, given that it was all the way back to 1932 that we didn't see a gain that big. But there didn't appear to be that kind of momentum behind it, and we're seeing some of the outcome of that today.
Right.
With the downturn.
As we tape this on December the 1st, you're not buying into the whole bull rally strategy. You didn't even last week. We were talking about that in another segment.
Yeah, I'm still a little bit bearish. And one of the things that's interesting, I looked at the chart and I actually ran this chart through.
There we go.
There we go. A little delay on the computer here for Monday morning.
It's Monday.
But one of the things on here, if people notice on the screen, the green boxes are actually the highs and the red boxes are the lows. And we're actually in a market right now where we're seeing lower highs and lower lows. That's a bearish trend in the markets. So we're not really building on these rallies. And it's worth noting, in a bear market, you'll have strong rallies. Now, the one thing when people are watching this, I think what we saw last week, not in addition to light volume and window dressing, is I do think there were some people kind of hoping that maybe an economic turnaround would occur in 4 to 6 months, and usually the market leads that. But however, when you saw the ISM data that came out this Monday morning, December 1st, it was at a 26-year low. So we're still in a big hole with the economy, and despite all the enthusiasm about Obama's economic team and the hopes that he will be able to hit the ground running, there's still a lot of work to be done to really improve things. And I'd like to be bullish, but right now I really have to take the other side and think that at best we might be looking at a flat market and very possibly going much lower on the Dow.
So as a technician, do you agree with that, with what that chart is indicating?
Yeah, a couple things. I think the market's going to be looking for some kind of confirmation of the rally that we had seen. Once you see a 4 or 5 day rally, the market looks for this confirmation rally, which usually comes either on day 5, day 7, or up to day 10. So while we did see a big pullback today, there still is hope that we can regain our momentum and start pushing up to the upside. But looking at Charles's chart, what you're looking at is kind of a sloppy descending triangle on the Dow Jones, and the trend is still terribly down.
Are you saying he brings in sloppy charts?
I mean, the price action, because of the holidays, I think you saw the opportunity for the market to unwind a lot of the oversold conditions, but if the market were to go down, the Dow Jones, based on that chart, could project a low of as low as 7,100. So, I mean, that would be pretty spooky. But again, for all of the bulls out there, or for at least people who are hoping to avoid another massive breakdown before the end of the year, seeing what happens between now and really the next, like I said, this week and next week, looking for that confirmation of last week's rally. This is what everybody's going to be paying attention to.
So based on what I'm hearing so far, I have to infer then, Tracy, that the market is not really pricing in another quarter or two of real bad economic news, as some people would have thought. It's not looking for a stabilization in the second quarter, and the turning point then in the market really was not a week ago that everybody thought it was.
No, and I think a lot of what we're seeing is what the pattern we continue to have been seeing over the past couple of months. There's, government injects more money in. There's a bailout like we just saw of Citigroup. We've seen that before. Everyone's, yay, they're bailing out more people. The markets rally. This rally was a little longer than some of the other ones we've seen, but it doesn't hold it. And so far, that's what we're seeing again. It's not holding it.
So why has the pool of people, kind of shifting to a little bit of a different subject, but still market-related, why has the pool of people that President-elect Obama has chosen been greeted well by Wall Street?
Well, I think the thing is, most of them are regarded as centrists. You have one person who actually has had a history of actually handling budget deficits and is perceived as being a deficit hawk. But I think also when people are looking at their experience, I think there's a general feeling that Barack's actually putting together a team that understands the crisis, understands how to get us out of the current crisis, but also realizes some of the long-term implications and some of the long-term issues that we have to deal with.
Yeah.
That and some people just think, Barack's the Messiah, so you can't discount that.
Do his cabinet choices restore investor or market confidence?
I think the market was looking for some kind of, hopeful sign, and he has assembled a really good team of economic names. But, the proof is in the pudding. People are going to want to see what these big names are going to do on day one of his administration. He's promising massive action, so again, that's what people seem to want right now. But again, it's all going to be about, okay, great, here's a bunch of great names. What are you going to do about it? So.
Tracy was shopping on Black Friday. She said that
I was.
before we began this segment, before we began taping. But sales, while they were kind of positive, a lot of mixed readings coming out of the action on Black Friday.
Right, I would agree, and I saw it visually while I was out shopping in downtown Chicago, yes. The things that were really discounted had a lot of people and a lot of shoppers were actually purchasing. And they were items that, at least in the areas I was in, were not normally on sale. A lot of luxury items were on sale at the big department stores. Saks, Bloomingdale's, Macy's all had, shoes and purses, luxury brands like Prada and Coach and things that don't ever go on sale. And those weren't just marked down. They were marked down in some cases 40 or 50% for only the day after on Black Friday. Mm-hmm. So there were swarms of shoppers in those areas. But, the regular sweaters that, were just nothing luxury item, those were sitting on the shelves, things like that. I also walked by some of the specialty retailers and went into some of those stores, and if they didn't have major sales, then there was almost no one in there. People didn't want just like $30 off a sweater or 20% off everything in the store. No, they're now demanding like 40% or 50% off, and if the retailer didn't give it to them, then the sales weren't that great on Friday.
So while shoppers spent about $41 billion in the 4-day Thanksgiving weekend, that pace isn't going to keep up through December, is it?
No, I don't think it is. And it's interesting. A lot of people, when they interviewed them, a lot of people went shopping for themselves. But we did actually see the sales drop throughout the weekend, and that's pretty typical. Yeah. But even the NRF came out today and said slightly more people finished most of their holiday shopping already or did the majority of it. So I feel like Tracy said, I think people really want the discounts. And if they can't get a discount, they're not going to spend the money. And there's really no reason to. But on the flip side is we did see broad-based discounts. Friday, I actually bought a battery from Lenovo for my laptop, something that should never go on sale. It was on sale 30% off, I think, just because they're trying to generate business any way they can.
Kevin bought tires.
Yeah, I had a flat tire, so but those weren't on sale. It's what everybody's saying is true. I mean, we did see a 3% increase this year over last year. What Charles says is kind of spooky because if people have already finished their shopping, that suggests that maybe the rest of the shopping season is going to go straight down. But who knows what will happen? But if it looks as if that the retailers had to make dramatic price cuts to lure in shoppers, but that's going to hurt their bottom line. And sales at the expense of profits just doesn't work. So,
well, another big event this week is centered on the automakers and whether they get their bailout or not. They have to come to Washington with a plan by tomorrow, Tuesday, the 2nd of December, a long-term plan as to how they're going to try and survive and thrive if they have any help. But I read an interesting article over the weekend in Barron's posing the question, is bankruptcy the best option for these three companies? What do you think?
Yeah, I read that article too, and I think one of the points they made that they actually brought in the article is actually consolidating the brands, and I think it does make sense. If you look across the line, I mean, you can make an argument that maybe Dodge survived as a specialty car maker. Jeep's got some value, but then you kind of look at all the GM's brands. It's hard to see where Pontiac fits in. Buick's only strong really in China. I think there's a case to be made to actually consolidate it, but I think when we're looking at what they say on Tuesday, it's not so much how are we going to cut costs, but how are we going to make cars that will do well in any market that will truly compete against the Japanese?
Well, one of the questions that gets posed is, when you talk about bankruptcy with the automakers, is then what form would a bankruptcy take? I mean, the most talked about is Chapter 11, but there's some flaws there, too.
Right. As a owner of a GM car, I see the flaws with any kind of bankruptcy plan because I'm already making my appointments to rush in for my maintenance or whatever else I need to have done in case my brand goes out of business. So if I was looking to buy a new car, that's the question that they've been arguing. What's my incentive to go buy a new car of a bankrupt company if I think there's not going to be dealers there to maintenance it and things like that? I mean, these are real issues.
Kevin, from a technical standpoint, absent a bailout, absent a bankruptcy, if these companies go under, what impact is this going to have on the market?
If you were to look at the share of GDP that the big three has on the economy, it has shrunk considerably. I think over the last 20 years, it's decreased by a third. And who says we need a big three nowadays? I mean, maybe big two is the right size. You've got a lot of displaced workers from the big three's woes, but you've got other companies like Nissan, I think Hyundai, they're going to be building plants here in the U.S. So let's just say that one of these big three automakers falls to the wayside while we're going through all of this restructuring. I bet you a lot of these skilled workers will be able to find jobs at these other plants. And even though these are foreign car companies, those are American jobs. So it's all going to be interesting. What's really interesting is that they've had 2 decades to be able to get their house in order. Now they're going to magically whip up this spectacular plan in 2 weeks. So.
Yeah, it kind of seems unlikely from a practicality
Right.
standpoint. We'll maintain our big three here at the round table, though. Actually, big four, because Tracy subs in when Steve's not around, so we have to keep Steve included. But there you have what's on the minds of investors for this, another challenging week in the markets. And with all the folks here at the round table, I'm Terry Ruffalo.